This is Morning Brief at 9. First up, let's look at the headlines. But just a little note, our first two headlines may seem a little contradictory, but it's not us. It's US President Donald Trump. Let's take a look at the headlines. US President Donald Trump mulls 100% tariff on India-China. Presses US and Europe to target Russian oil buyers. This after Modi, Putin and Xi Jinping show unity at the SCO summit. And then in a dramatic U-turn, Trump says he looks forward to speaking with very good friend Prime Minister Modi. Expresses confidence US and India will reach a successful conclusion on trade talks. And just a few hours after Trump's message, Prime Minister Modi reaffirms India-U.S. partnership, says trade talks will unlock limitless potential and expresses hope for early conclusion and a brighter shared future. Meanwhile, Finance Minister Nirmala Sitharaman says India keeping all doors open as diplomatic teams engage with Washington after US imposes 50% tariff on Indian goods, hitting labor-intensive exports as well as delaying trade talks. And staying with trade, Commerce and Industry Minister Piyush Goyal says India-EU trade talks progressing rapidly with 60 to 65% chapters finalised. Hopes to substantially conclude FTA during visit of EU Trade and Agriculture Commissioners this week. India's Prime Minister Narendra Modi as well as UK's Prime Minister Keir Starmer to attend the Global FinTech Fest in Mumbai in October. Over a dozen central banks and 500 investors are expected. The event to showcase India-UK FinTech synergy. Air India Indigo SpiceJet cancel flights to Kathmandu as Nepal's airport shuts amid massive anti-government protests. India advises citizens to defer travel. Gold prices soar more than 5,000 rupees to record 1,11,750 rupees per 10 grams in Delhi. Silver jumps to 1,28,000 rupees per kg as global demand, safe haven buying, weaker dollar and geopolitical tensions drive historic rally. Meanwhile, rupee falls 6 paise to revisit record low of 88 rupees 15 paise against the US dollar amid global trade uncertainties, rising crude prices and US tariff concerns. In yet another dramatic U-turn, US President Donald Trump now says he looks forward to speaking with what he calls his very good friend, Prime Minister Modi, in coming weeks. Trump said he feels certain that Washington and New Delhi will reach a successful conclusion on trade. In a Truth Social post, the US President wrote, and let's pull up those graphics, I'm pleased to announce that India and the United States of America are continuing negotiations to address the trade barriers between our two nations. He also went on to say, I look forward to speaking with my very good friend Prime Minister Modi in the upcoming weeks. I feel certain that there will be no difficulty in coming to a successful conclusion for both of our great countries. Now remember, Trump's rhetoric towards India has toned down after New Delhi's participation in the SCO summit, where pictures of Prime Minister Modi and Putin as well as Xi Jinping underscored their bonhomie, and those images went viral too. Now, right after Trump's message on Truth Social, India and India's Prime Minister Narendra Modi has replied with a strong affirmation of India-US ties. Prime Minister Modi said on X, India and the US are close friends and natural partners. I'm confident our trade negotiations will unlock the limitless potential of our partnership. Prime Minister Modi added that teams on both sides are working to conclude the talks at the earliest and that he is looking forward to speaking with President Trump soon. He also said that together, the two nations, India and US, will work to secure a brighter, more prosperous future for their people. So let's unpack what this latest round of messaging exchanges on social media between US President Donald Trump as well as Prime Minister Modi mean, especially given the fact that there is a 50% tariff already on India and there are certain red lines that India is unlikely to back down on. Dr. Srinath, policy researcher and corporate advisor, joining us this morning along with Lloyd Matthias, angel investor. Good morning, gentlemen. Pleasure having you back on News9 after a while, I might add. I want to understand, Srinath, from you first, that there are certain red lines, and these red lines on agriculture, dairy, fisheries, these sectors are unlikely for India to back down on. And despite the GST 2.0, India, to safeguard its labor-intensive MSME sector, continues to be a priority. Add to that, of course, India has gone ahead multiple times on multiple fora and said that we will continue to buy Russian oil as well. So if these red lines continue to be intact, what new way forward can we expect in the new round of trade talks?
Morning, Karthik. I think red line, also sounds more Kremlinish to an extent. I think we should say non-negotiables at best.
All right.
Or probably the sovereign line, that this is a line that India would never cross. 1/6 of the world's population and a huge younger population at that, and an agrarian economy at that. I think India cannot afford to kind of blink. So in this standoff, so to speak, political standoff, so to speak, I think Prime Minister Modi's very diplomatic and yet very firm, resolute stance of not backing down, I think one is laudable. And he has also openly said so in so many words, and we are also seeing the opposition kind of rallying together, saying in the interest of sovereign, we will not back down, even though there will be short-term pain. I think GST 2, for all the rhetoric, especially the political one, saying that it has been thought through for a very long time, doesn't look so. It definitely is a reaction to the Trump tariff. But I wish that we use Trump tariff as almost the 1990s moment when India had embargo from the US after the nuclear test. And we had to do a lot of political and policy redo all over again. I think, can we use this as almost a crisis moment? My worry is we are probably missing this. So coming back, I think India will not blink first, is my feeling, considering that there's too much at stake politically. And let's not forget two aspects. Despite being national leaders, they're also politicians and have to set the tone for the next election, and which is what Trump is doing. But there is far more larger at stake for Prime Minister Modi, because the reforms that he has set in motion cannot be undone by President Trump, and that's where we are.
All right, so India unlikely to blink first. Lloyd Matthias, I want to bring you into this discussion, and also at a time when there seems to be yet again some sort of mixed signals emerging from the US, because reportedly, and in fact, a story in the Financial Times has reported that President Donald Trump is weighing massive new tariffs of up to 100% on India and China in a bid to pressurize Russia. Now, this report also goes on to say that US and European officials in Washington will impose these new sweeping duties as much as 100%, and that again in a bid to add pressure on Russian President Vladimir Putin. Now, this is months after Trump gave Moscow a deadline to agree on a deal to end the war in Ukraine. But that war is anywhere near its end date from where we see it right now. So again, this mixed signaling from Donald Trump. At one level, you are continuing with the 50% tariff. You want to also potentially show this image that you are willing to take the hard line even further and impose tariffs up to 100% on India, and then immediately going on social media and saying, I'm keen to speak to my very good friend Modi and we will figure out a way forward.
Good morning, Karthik. Great to be back. I think what you've summarized is really a little bit of, I would say beyond mixed signaling. I think it's a bit of scrambled signaling, but, sadly, otherwise it's become pretty mainstream over the last few months in terms of what's emerging from the US leadership. I would say two things. One, I think clearly, what's transpired in the last fortnight. I think India's attendance of the SCO summit, the photo ops between Modi, President Putin and President Xi, I think sent a clear signal to the US that India is holding firm. Very clearly, India will not buckle down under pressure either from posts on social or obviously the tariffs which have come into play. And it is going to mean short-term harm. It is going to hurt for the short term. I think clearly India laid down the red lines clearly. To an extent, I would say, not to an extent, to a large extent, I think India's population rallied behind the ruling dispensation. I think the opposition too, in a sense, held on to that. So I think it sent a very clear message. I think what we're seeing in the last few days is clearly, a newly popular term, an off-ramp. I think what we're seeing is a softening of the US stance. We've realized that Russia hasn't really paid heed to, let's say, the Alaska summit, and clearly the Russia-Ukraine war is kind of not really de-escalating in any form. I think China has further continued on its own path. I mean, the special celebrations with King Dong-Hyun and Putin, I think clearly sent a hard message. So I think what the US has recognized is that clearly the importance of India as a long-term strategic partner, the short-term rhetoric notwithstanding. I also understand that pressure is building up to some extent within the US, even among Republicans, about the fact that the whole India relationship SARing is not going down very well. So I think that part remains. The second part, I think, pragmatism within the US establishment is recognizing that India has a lot to offer outside of the trade imbalance. Yeah. And the fact that we are a very large weapons importer, and we've been pushed further into the Russia quadrant. So India, in the last 2 decades, have opened up to the US. Two is, as purchasers of commercial aircraft, I think a lot of person-to-person ties. I think those aspects are slowly coming home to roost. And I think that's really making President Trump get into an off-ramp, or what I would really call almost about to make a U-turn. I would sense the tidings are good. I think within the next month or two, I think things will change quite dramatically. And I really believe we have optimism to look beyond those 50% tariffs, which sooner than later will get to more rational levels.
Yeah, so more rational levels, of course, expected on the tariff front. But let's look at what is it that US expects from India. Let's look at those points one by one, and maybe I'll take reactions from both of you alternately on this. The first thing that US seems to want from India are lower tariffs on agriculture products. This includes corn, soybean, almonds, apples, ethanol, etc. Srinath, can India afford to lower agri tariffs? Is this something that you think in the next round or any further subsequent rounds of negotiations, India will look at lowering tariffs on agri products? If you could unmute yourselves, please, Srinath.
Sorry, it's far more structural solution. It's not as easy as just reducing the tariff.
Okay.
We have a problem of farm-to-plate inefficiency. We are far more inefficient as an agri sector, and our productivity numbers are far, far lower. We are not fully mechanized. We don't have corporate holdings. We don't have large holdings. So one part of the answer is it is a political question. You have a large mass of people who are also voters. So it becomes a political equation. And then are you giving in? Are you sacrificing the nation for a global deal? So it's a non-starter there. And two, even economically, I don't think we are ready today to open up the doors for corporatization, so to speak, of the agri sector. So I think we are looking not less than at least the next decade before we can open up anything in the farm sector.
Right. So simple answer, short-term answer is no, India is unlikely to lower tariffs on agri. Second point to you, Lloyd, US wants India to buy more military equipment. We know that the GE engines, 104s for the Tejas are already under a stage of India procuring. But beyond that, US wants India to buy more military equipment. Now, India, like we've discussed already, is also in talks with Russia, and that becomes a threat for the US. But can India afford to up its defense purchases, equipment purchases from the US to balance out what Trump feels is an imbalance in the trade equation?
I think that's the area that India will have to soften a little bit.
Okay.
As Srinath said, clearly there's a hard line in terms of what India can and cannot do in agriculture, both in terms of India's preparedness and also the kind of political signaling that the ruling dispensation would like to send to Indian farmers. And I think the Prime Minister has repeatedly asserted that Indian farmer interests, Indian fishermen interests are not going to be compromised. So clearly I do believe that part is not going to be. But when it comes to defense purchasing, I think India, being the largest defense importer in the world, can afford to turn around a little bit and move a few things to the US. But specifically outside of defense, I would say two things also work in India's favor. I think one is the fact that as a commercial aircraft buyer, with two airlines playing and Air India already having, I think, top of the order book when it comes to Boeing planes over the next 5 years, I think those are key levers that India will play. So I think India will have to soften a little bit as far as defense purchases goes. Will mostly look at other avenues where some degree of import from the US can permit. Will also soften some of the tariffs on internal US goods like they did in the last round with Harley-Davidson bikes and cosmetic changes. I think those are areas where things will soften a bit.
All right. I'll combine the next two questions to you, Srinath. US also wants India to stop buying Russian oil. India has said India will not stop buying Russian oil. At the same time, at least from what the political messaging and diplomatic messaging around Trump's chides on India, Putin, Xi Jinping coming together seem to suggest that US wants India to maintain trading distance from the BRICS bloc. So are either of these in the likelihood of India agreeing on? Russian oil, India may at best reduce purchasing, and there are reports which are suggesting that India has already reduced its shipments of Russian oil coming into the country. But a trading distance from the BRICS bloc, some sort of a disassociation with BRICS, is that too far-fetched for the US to expect?
So I think it is also too far-fetched to expect India to cut off ties with Russia. I mean, that's a starter. I mean, BRICS comes a far later one because BRICS is in reality only about 15 years old. But the narrative is India as a non-aligned nation. It works with all the partisans around the world. If you look at the entire current crisis is happening, Russia, Ukraine, India is friendly with both. Iran, Israel, India is friendly with both. So the reality is India is not going to trade off one party to another or one friendship, so to speak. So I think it is also very childish, but not new for the US to expect others to behave like kids, saying that if you are going to talk to another kid, I'm not going to speak to you. I mean, that doesn't work with India anymore, not the 21st century India now. I think it will be a non-negotiable, and I also have a slightly divergent view from Lloyd's perspective on the defense and purchases. Yes, India would probably offer soft of buying more weapons from the US. I think, but it cannot come at the cost of buying outdated fifth generation equipments. I think the last time the purchases did not go through because the US was not offering the latest generation. And I think India would expect a lot of these MRO facilities, especially for airlines, to be set up in India. The downtime can be far expensive strategically if your planes don't function. Planes and airlines make money only when they're flying. So which means the availability of spare parts and upgrades.
But flip side to that, Srinath, also is, can India afford and does India need the F-35s, for example? They're going to cost us a bomb. They're going to cost India a leg and an arm. And India may or may not really have a use case for the F-35s.
So, Karthik, I mean, this is where basic economics comes into play, right? I mean, if you look at the entire aviation sector and all defense sector, the manufacturer is also the part financial. The entire sales is pegged on the financing package. So if you look at the US, almost every single deals that they have done in the last so many decades are all with financing package. And it also kind of holds them because the spares and servicing for the next subsequent 20 or 30 years, that one full generation, is dependent on that country. So that there is also a strategic challenge for national security aspect. Would you buy equipments, especially in the latest fourth industrial revolution, IoT, equipments where somebody actually holds the source code master key and can switch it off midair? I mean, it looks very scary and almost like a spy movie, but that's the reality with current technology. You buy all the planes and the source code is with the country that suddenly doesn't like you anymore. What's going to happen to your spare parts and what's going to happen to your machinery? They might be non-functional.
Absolutely. Lloyd, final question to you. Trump also seems to want India to, one way or another, acknowledge his role in the ceasefire during Operation Sindoor. Now, India has very clearly said the call came from Pakistan and Trump had little role, in fact, no role to play in the ceasefire or the cessation of firing. Trump has been repeatedly saying that he was the one who made the phone calls and he got India and Pakistan to agree to a ceasefire. Diplomatically, how should India tread this line of Trump wanting acknowledgement?
India has long held the point that they don't need an external intervention solving a border dispute with Pakistan. I think India will hold that line. Again, a strong message for the internal political electorate. But I think knowing Trump's craving, I think while obviously this will not change, I think India will try to move out of that issue and focus discussions on defense imports, on trade, and find various other points of common ground. I really believe that's another area that India is not going to acquire. And I presume that Trump has overplayed his hand on that front. I don't see things changing quite dramatically there.
All right, things not changing dramatically on the Operation Sindoor acknowledgement front. Srinath Sridharan, Lloyd Matthias, always a pleasure. Thank you so much for joining us here on News9 with those very vital inputs. And before we get out of this story, as things stand today, India enjoys a trade surplus with the United States, approximately $30 to $40 billion worth of trade surplus. The U.S. administration, including Peter Navarro, continue to attack India over Russian oil purchases. Now, as things stand, 50% tariff on Indian exports into the U.S. stand as of August 27th, barring three sectors: pharmaceuticals, electronics, as well as semiconductors, on which tariff rates are yet to be announced. And finally, what has made this entire trade equation even more complex is the fact that it is now much harder for Indians to get US visas, not just the leisure travelers, but also for Indian students. So let's see which way this trade negotiation with the US finally concludes. Finance Minister Nirmala Sitharaman says India is keeping all doors open as diplomatic teams engage with Washington over America's steep tariff on Indian products. Now, since August 27th, the US, as we told you, has slapped a 50% import duty on Indian goods, hurting labor-intensive exports like shrimp, textile, leather, as well as footwear. Now, speaking at a conclave, Sitharaman said trade talks with the United States can still move forward and India is not making things difficult. This comes as both nations have been negotiating a bilateral trade agreement since March, with 5 rounds completed so far, but the 6th round had been delayed after the US deferred its visit last month. But as things stand right now, it seems that September 17th and 18th is when a US trade negotiation team will arrive in India. Remember, the US is India's largest trading partner, with bilateral trade at $191 billion and FDI inflows into India over $76 billion since the year 2000. Now, time for a very short break. Coming up on the other side, Kranti Bhatini will be here to give us a mood check on the Lal Street. Markets seem to be opening a little mixed this morning. Auto sector reeling under pressure. Profit booking is what seems to be the case. We will bring you all the action from the Lal Street on the other side of the break.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
ट्रस्टेड लॉयर शर्मा जी ने अपने दीवारों पर जेके मैक्स पेंट्स क्या लगवाया? अजीब अजीब बहाने लेकर आने लगे पड़ोसी उनका घर देखने।
हाय शर्मा जी, एक रील बना लूं उस ब्यूटीफुल सी वॉल के पास। मैं देखती हूँ।
हमारा टॉमी नहीं मिल रहा, यहाँ आया होगा।
यहाँ टॉमी?
टॉमी। ऑनलाइन इंटरव्यू है, अंदर कर लो प्लीज।
जेके मैक्स पेंट्स, खुशियों के रंग।
This is nothing. My Skoda is 5 stars. तेरे को पता है मेरी Skoda ना ऑटोमेटिक है और वो भी 7 speed. My Skoda can fly to Jupiter like a rocket.
Skoda.
ये बेस्ट है मैम।
पर पहले वाला क्यों नहीं?
अजय भाई, this one's for you. नया बिरला ओपस पेंट्स देने के लिए।
ऐसा क्या है इसमें?
एडवांस क्वालिटी और बिरला ओपस एश्योरेंस एक्स्ट्रा।
एक्स्ट्रा?
1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे? वापस करके देंगे? वापस करके देंगे?
वो भी फ्री।
फ्री? पटेल भाई,
यस मैम।
you're a rock star.
क्वालिटी पे इतना कॉन्फिडेंस, इसलिए बिरला ओपस एश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
The power of digi-alkalines from Nippo Thor.
ब्यूटीफुल।
18th century और अभी तक चल रही है।
ज्यादा नहीं चलेगी।
कुछ कहा?
प्रोमिनेंस नहीं,
प्रोमिनेंस।
वाओ, ओरिजिनल।
यार स्पेन से लाए थे।
वहीं छोड़ा थे। प्रोमिनेंस नहीं है ना?
प्रोमिनेंस?
मैं कहना चाह रहा था कि प्रोमिनेंस नहीं है।
प्रोमिनेंस मतलब
Prominence windows, इसमें है highest weather resistance और घर को रखे safe from termites, seepage, dust and noise. Prominence for the world you deserve.
Welcome back. You're watching News9. This is Morning Brief at 9. We will bring you an update on stock markets in just a bit. First up, interesting new developments on the bullion coming in this morning. Gold prices soared by as much as 5,000 rupees. In fact, a little more than that on Tuesday, hitting yet another record high of 1,12,750 rupees. I'll repeat that, 1,12,750 rupees per 10 grams in the national capital. Now, this is driven by strong global trends. Now, in this year alone, gold has surged nearly 43%, rising from 78,950 rupees at the start of the year per 10 grams and also now up almost 43% at about 1,12,000 rupees 750. Now, silver has also jumped by nearly 2,800 rupees, reaching a record of 1,28,800 rupees per kg. Globally, gold touched an all-time high of $3,659 per ounce, supported by weak U.S. labor market data, expectations of monetary easing as well as a weakening dollar. According to analysts, the rally is due to central bank demand inflows into ETFs, geopolitical tensions as well as concerns over U.S. tariff impact. A massive rally in gold, but not the kind of rally one would expect in the stock markets just as yet, despite the U-turn, second time in 4 days by US President Donald Trump on pursuing those trade negotiations and trade talks with India. Markets have opened about 0.5% or so higher this morning. The benchmark Sensex and Nifty are racing towards their next levels. We are looking at Nifty 50 very, very close to the 25,000 levels. Meanwhile, Sensex is racing towards the 81,500 odd levels. Let's see if this momentum continues, because something is really pulling back the markets from reaching these new rally levels this morning, and that seems to be the auto sector. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are helping the Nifty and the markets per se gain, and which are the ones which is pulling it back. And auto sector seems to be really enjoying that spate of profit booking. In fact, it started yesterday. We are seeing some action continue this morning as well. Remember, auto stocks had rallied massively after the GST reforms were announced, and investors now want to take some cash off the table. So we are seeing Maruti Suzuki is down about 0.8% or so. Mahindra & Mahindra is down about 0.6%. Tata Motors also down about 0.5 percentage point or so. Meanwhile, the IT sector has continued to outperform the benchmark indices yesterday as well as today. Remember, yesterday there was news of Infosys buyback, but this morning it seems that the IT stocks are reacting favorably to the chances of US Fed cutting interest rates, as well as now this potential U-turn between trade of India and the United States. Infosys is up about 1.5% or so this morning. HCL Tech up almost 2%. Wipro up very, very close to 2%. And TCS as well as Tech Mahindra also up more than 1.5% or so in early trade. Let's try and make sense of all this that you're seeing on the charts this morning with Kranti Batini, who joins us this morning. Kranti, good morning. Pleasure having you back here with us on News9. Help us understand, is there some sort of a trend that you're seeing on the charts this morning?
Karthik, good morning to you. Yeah, we can see the leadership rotation. IT, which was the laggard, have been taking the leadership for the market to sustain and taking the market to the range of 25,000 level. That's what we can see. Market is just way below the kissing distance from the 25,000 level. Whether we could able to touch 25,000 level and sustain that range, that is crucial for the market. As long as market could able to sustain the level of 25,000 level, the medium to short term market trend can turn as positive zone. That's what we can expect from the market. The commentary that's coming from the US administration, especially from the President Trump statement, that is giving some kind of a positivity in the market that can stop the unprecedented FII selling what we are witnessing at this point of time, thanks to the DIS who have been absorbing the selling from the past 15 days, and that's where the positivity is coming in the market, which could hold on to the level of 25,000 level.
All right, Kranti. But talking about Donald Trump and talking about the sort of U-turn that many are calling it in his stance towards India. Now, what is it that foreign investors would really want to come out of the next round of negotiations? One estimation suggests that perhaps this entire secondary tariff of 25% on India should go. But then parallelly, Donald Trump is also talking about EU slapping a 100% tariff on India and China for importing Russian oil. So realistically, what should be the levels of tariffs on India for foreign investors to see value in coming back?
One thing, Karthik, just the narrative was just a couple of months back. We are looking forward for the most favorable nation in terms of the tariffs are concerned. That's what the narrative was. That's what we have been enjoying and looking forward for that status. And the complete 360 degrees change in the entire deal negotiation process, and India went to the range of 50%, which is unexpected completely, and it is one of the highest in the entire bilateral trade of US is concerned and India is concerned. That's where the uncomfort came for the foreign portfolio investors, and the kind of statements that do erupted in the past 1 month, that has given a lot of discomfort to the foreign portfolio investors, marquee investors are concerned. That's where they try to be on the sidelines from the past 1 month. If there is a positivity emerges, and if the negotiation again they come on track, if they remove the first 25% tariff, the extra additional tariff that was imposed, if the US administration removes unconditionally immediately, that can be a positive trigger, and later on we can see further how the things are going to progress in the coming months and days.
All right. And so far, Kranti, we don't have any clarity on three sectors, that is electronics, pharmaceuticals, as well as semiconductors. Now, pharmaceuticals become a big question mark on India's trade surplus with the US. Now, if Donald Trump were to go ahead and not make any fresh tariff announcement, or rather on the contrary, really increase tariffs to upwards of 100% or so, what impact is that likely to have on investors and the sentiment around investing in India?
Karthik, in terms of the pharma and IT is concerned, where the dependency on each nation is high, that's where they're playing the cards with China also. For US replacing India with respect to the generic drugs and pharma is concerned, it's not an overnight thing. That's where the Trump administration is folding their hands at this point of time, watching the things at this point of time. I don't think so they would be in an aggressive mode or in a hurry to touch base any kind of tariffs with respect to pharma is concerned, because all our US exports are US FDA standards, and they have the good manufacturing practices, GMPs are concerned. So replacing with these kind of GMP practices overnight cannot be possible, and if they go with any kind of tinkering the tariff with respect to pharma is concerned, that's going to impact the US healthcare expenditure and budgets are concerned. So I don't think so the US administration would be in a hurry to touch base the pharma at this point of time, because the dependency on India is at a higher note with respect to pharma and IT services are concerned. These are not the things where they can replace overnight at this point of time. That's where they have been making the statements, but they could not able to take any kind of decision at this point of time. The same case with China. The dependency on China is high for US, and for China also high for dependency on US. That's where they have been mulling despite of the provocative statements. But at this point of time, they're sitting on the table and negotiating the matrix.
All right, negotiating the matrix. Finally, I want to draw your attention, Kranti, to the auto sector this morning. And had it not been for profit booking potentially in the auto sector, we could have seen much better levels on the Nifty and the Sensex. But Can't deny the fact that there seems to be a lot of profit booking happening after the rally we saw in the auto sector. Maruti Suzuki is down about 0.6%. Mahindra & Mahindra, Tata Motors, Bajaj Auto, Eicher, Hero Motocorp, pretty much the entire pack is down this morning. Is this just profit booking, or is there something else that one should be wary of?
Two things, Karthik. One thing is it's profit booking. The stocks have rallied after the announcement of GST, and some clarity the auto companies have been waiting with respect to the removal of cess is concerned for the high end of the vehicles which have more than 4 meters and the CC about 1200 CC.
Yeah.
So the cess has to be removed. That has to be announced officially. That's where there should be a greater clarity is needed for the auto companies. But the tendency is at this point of time, some kind of profit booking is taking place because these stocks have been in a consolidation phase and they rallied well. So some kind of a profit booking, taking the money from the table we are witnessing at this point of time.
All right, Kranti Batini, thank you so much for input. Pleasure having you here with us on News9 this morning.
Thank you, Karthik. Always my pleasure.
And before we slip into another short break, let's look at some of the global stories that we're following for you this Wednesday morning. US President Donald Trump suggests European Union to impose new tariffs of up to 100% on India and China, two of Russia's biggest oil buyers, telling EU America is ready to move in lockstep. US Supreme Court agrees to hear arguments in November on the legality of Donald Trump's sweeping tariffs after his administration pushed for an expedited ruling. Donald Trump issues rare criticism of Israeli Prime Minister Benjamin Netanyahu, distancing himself from Israeli strikes on Hamas in Qatar. A US federal judge temporarily halts Donald Trump's attempt to oust Federal Reserve Governor Lisa Cook as she challenges her dismissal from the US Central Bank. US employment growth is set for a record downward revision, with 9,11,000 fewer jobs added in the year through March than previously reported, slashing earlier estimates of 1.8 million jobs created. Apple launches a much-awaited iPhone 17 lineup, touting its thinnest smartphone ever as the company races to prove it can keep pace in the AI-driven tech shift. French President Emmanuel Macron names loyalist Sébastien Lecornu as Prime Minister, his fifth in less than 2 years as France wrestles with a deepening political crisis. China's consumer prices record their steepest drop in 6 months, latest sign that the world's second largest economy is still battling deflationary pressure. Chinese robotics startup Unitree seeks a $7 billion valuation in a planned listing, one of the country's biggest onshore IPOs in years, as Beijing backs its tech champions. We'll bring you these stories after a short break.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत
ब्यूटीफुल
18th सेंचुरी और अभी तक चल रही है।
ज्यादा नहीं चलेगी।
कुछ कहा?
प्रोमिनेंस नहीं,
प्रोमिनेंस।
वाओ, ओरिजिनल
या स्पेन से लाए थे।
वहीं छोड़ाते। प्रोमिनेंस नहीं है ना?
प्रोमिनेंस?
मैं कहना चाह रहा था कि प्रोमिनेंस नहीं है।
प्रोमिनेंस मतलब
प्रोमिनेंस विंडोज, इसमें है हाईएस्ट वेदर रेजिस्टेंस और घर को रखे सेफ फ्रॉम टर्माइट, सीपेज, डस्ट एंड नॉइस। प्रोमिनेंस फॉर द वर्ल्ड यू डिजर्व।
3, 2, 1, fire!
light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. On to stories from around the world. Israel launched a dramatic airstrike on Doha in Qatar on Tuesday, attempting to assassinate Hamas political leaders. The U.S. quickly distanced itself from the attack. President Donald Trump said he was not thrilled by the strike, which comes as Washington pushes to broker a ceasefire in Gaza and bring an end to the nearly 2-year-old war. Listen in.
Well, I'm not thrilled. I'm not thrilled about it. I don't have to do that. I'm not thrilled about the whole situation. It's not a good situation. But I will say this: we want the hostages back, but we are not thrilled about the way that went down today. I'm never surprised by anything, especially when it comes to the Middle East. I'll be giving a full statement tomorrow, but I would tell you this: I was very unhappy about it. Very unhappy about every aspect, and we got to get the hostages back. But I was very unhappy about the way that went down.
The U.S. Supreme Court will hear arguments in November on the legality of President Donald Trump's sweeping tariffs after his administration pushed for an expedited ruling. A lower court earlier found that Trump exceeded his authority by using emergency powers to impose broad duties on nearly all U.S. trading partners, citing reciprocal trade measures to safeguard Washington's economic interests. The appeals court ruling also cast doubt over deals Trump has struck with key trade partners such as the European Union, raising the question of what would happen to the billions of dollars in tariffs already collected by the United States if the Supreme Court does not side with his policies. Meanwhile, not the best news emerging from the U.S. job scene as well. The U.S. economy added far fewer jobs than initially projected in the year ending March. Government data released on Tuesday showed the economy created just 911,000 fewer jobs in those 12 months. The revision suggests the labor market was already losing steam even before President Donald Trump's aggressive tariffs on imports. More details in this report.
U.S. job growth appears to have been significantly weaker than reported. Data from the Labor Department's Bureau of Labor Statistics on Tuesday showed that 911,000 fewer jobs were created in the 12 months through March than previously estimated. The report comes on the heels of last Friday's non-farm payrolls data that showed job growth in August nearly stalled, and the economy shed jobs in June for the first time in 4.5 years. Tuesday's annual revision of the jobs report is a preliminary estimate. A final revision will be released in February. In addition to being hobbled by uncertainty stemming from trade policy, the labor market has been pressured by the White House's immigration crackdown, which has undercut labor supply. But Tuesday's report, which revises data collected from April 2024 through March 2025, suggests that job growth was stalling even before President Donald Trump's aggressive tariffs on imports. Sharp downgrades last month to May and June employment figures angered Trump, who fired Bureau of Labor Statistics Commissioner Erica McIntyre, accusing her without evidence of faking the employment data. Trump has nominated Heritage Foundation economist E.J. Antony to replace her. Antony, who has penned opinion pieces critical of the BLS and even suggested suspending the monthly jobs report, is viewed as unqualified by economists across the political spectrum.
And despite the slow job growth rate in the U.S., Wall Street hit a milestone on Tuesday as all three major stock indices closed at record highs as the downward payroll revision supported expectations that the U.S. Federal Reserve will soon cut interest rates to shore up economic growth. Take a look.
Wall Street hit a milestone on Tuesday as all three major stock indexes closed at record highs, with the Dow adding more than 0.4%, the S&P 500 gaining over 0.25%, and the Nasdaq climbing more than 0.33%. Data released on Tuesday showed U.S. employers added nearly 1 million fewer jobs in the 12 months through March than previously estimated. The large downward revision supported expectations the Federal Reserve will soon cut interest rates, but by how much, wondered Kevin Mon, Chief Investment Officer at Hennion & Walsh Asset Management.
If they cut by 25 basis points, or do they cut by 50 basis points? If they cut by 50 basis points, are they going to admit that they were wrong and they are late to the party? And if they do only cut by 25 basis points, what are they going to signal about the economy going forward, particularly as it relates to the jobs market? Are they more concerned with the jobs market than they are with inflation?
Stocks on the move Tuesday included Apple, which fell 1.5% after the company unveiled new iPhones that failed to excite investors. Shares of AI infrastructure firm Nebius soared almost 50% after the company signed a $17.4 billion deal with Microsoft. Rival CoreWeave jumped 7%. And shares of United Health jumped more than 8.5% after the insurer said it expects enrollment in top-rated Medicare plans to be in line with its expectations, which could mean bigger payments from the government to the company.
And Apple on Tuesday unveiled its iPhone 17 lineup starting $799, but the showstopper really was the ultra-slim iPhone 17 Air, priced at $999. Now, this 5.6mm device, less than a quarter inch, features the new A19 Pro processor, all-day battery life, and up to 40 hours of video playback. Apple CEO Tim Cook called the new iPhone a total game changer. While all new devices incorporate generative AI technology, Apple made no major announcements about expanding its AI capabilities beyond updates to existing features in the Apple Intelligence Suite. The launch comes as the Silicon Valley powerhouse faces headwinds from U.S. tariffs, investor doubts about its AI readiness, and President Donald Trump's pressure to shift Apple's manufacturing away from China. French President Emmanuel Macron has named loyalist Sébastien Lecornu as the country's new prime minister. Lecornu, once a conservative protege who rallied behind Macron's 2017 run, takes office as France faces a complicated political crisis. The appointment marks Macron's fifth prime minister in less than 2 years. Take a look.
French President Emmanuel Macron named loyalist Sébastien Lecornu as the country's prime minister on Tuesday, choosing a one-time conservative protege who rallied behind his 2017 presidential run. Macron's choice indicates his determination to press on with a minority government that stands firmly behind his pro-business economic reform agenda. The move risks alienating the center-left Socialist Party and leaves Macron and his government depending on the far-right national rally for support in parliament. Macron was forced to appoint a fifth prime minister in less than 2 years after Parliament ousted François Bayrou over his plans for taming the country's ballooning debt. Analysts say it puts France in unprecedented territory with an increasingly partisan political crisis that goes far beyond the budget issue and could threaten the national economy. The crisis prompted a protest movement known as Block Everything to call for a day of demonstrations around France on Wednesday. The movement appeared online in May among right-wing groups, according to researchers and officials, but it has since been taken over by the left and far left. Antoine Bristiel is the director of the Jean Jaurès Foundation's Opinion Observatory.
What we notice are people who are very aligned with left-wing values on these economic issues. This is to say, they demand much more redistribution of wealth, much more social justice. And also, there is a slightly populist anti-wealthy sentiment. That is to say, a real distrust of the political but also economic elites that is expressed very clearly.
Bristiel added that he believes there is a real crisis of representative democracy in France, and that the Block Everything movement reflected real social anger and distrust of France's political institutions.
And back home, Prime Minister Narendra Modi as well as UK Prime Minister Keir Starmer will lead the Global FinTech Fest in Mumbai next month. The three-day event starting October 7th will also see participation from over a dozen global central banks, including regulators from Germany, France, Switzerland as well as Singapore. Organizers say around 500 global investors and 400 exhibitors are expected to attend. Notably, India and the UK share one of the most dynamic economic relationships with opportunities to combine London's fintech leadership and India's digital infrastructure. Starmer's visit also comes as India and UK deepen trade ties following the signing of the bilateral trade agreement. And finally, we leave you with one of China's newest and most high-profile startup stories, Unitree Robotics, which is targeting a valuation of up to 50 billion yuan. That's $7 billion in its planned initial public offering. If successful, Unitree's IPO would be one of the biggest and highest-profile onshore tech listings in China in years and would come as Beijing steps up effort to support its tech champions in tapping capital markets for their funding needs. Take a look at this story.
Unitree Robotics could be on course for one of the most high-profile IPOs in China in years. Sources said the firm is looking at a valuation of as much as $7 billion for its planned initial public offering. The launch could test investor interest in the frontier industry of humanoid robots. The Chinese firm's robots previously caught the popular imagination globally when it released videos of them showing human-like capabilities. Its founder, Wang Xingxing, was also among a small number of executives who attended a rare meeting with President Xi Jinping in February. Startups including Unitree and DeepSeek have proved popular, and it comes with Beijing investing billions of dollars in robotics, semiconductors and AI. Unitree said last week on its X account that it was actively advancing the IPO preparations. The firm said it expected to submit the listing application documents in the fourth quarter of the year. It didn't provide other details, including a timeline for a potential listing. The sources said Unitree plans to list on Shanghai's tech-focused Star Market. Unitree won major new investors in a previous June funding round, including giants like Alibaba, Tencent and Geely.